Well, we saw strong jobs numbers in the U.S. last week. We're back with Brooke Thackray from Horizons ETF Management Canada, who believes those numbers could be misleading. Why so, Brooke?
Well, we were just talking about variable factors a few minutes ago with the guest from CD Howe. And employment's a lagging indicator, first of all. And we saw some really strong numbers last week from the non-farm payroll number. They came in at 303,000 jobs being created in the month of March. That was way above expectations. But there's a couple things. First of all, that number tends to be high going into recessions. And there's a reason for that. It doesn't really make sense until you break it down, is that the non-farm payroll number actually includes part-time jobs as jobs. So if one person has 3 jobs, that's 3 jobs. And so the part-time has been increasing dramatically, and that's been boosting up the non-farm payroll numbers. So that is not necessarily an indication of economic health in one way. It's saying, well, there's a little bit of a problem. This graph that we have right here is the non-farm payroll number. That's the total all being added up cumulative over time.
And the orange bars are recessions, correct?
That's correct. And so what you can see is that non-farm payroll numbers just sort of peak out a little bit and then go down in the recession. So we can go back to the 2000 and the 2008 recessions as well. Well, 2020, that was a little bit of an extreme, but the same thing happened. The non-farm payroll number didn't drop dramatically before the recession. And a lot of people are trying to gauge the whole economy on the non-farm payroll number. I think that's a bit of a mistake because it really starts to drop only once we get into the recession. So it's not a good signal to be using for an upcoming recession. I think that they're being overstated, and a lot of people are looking at this as being too positive, mainly because of the part-time jobs. And also, a lot of the hiring in the States has been from government employees as well. They've been increasing their government employees dramatically. And that's included in the non-farm payroll number, which is boosting it up as well. So it's misleading. At this point, I think it's overestimating the economic strength, and you're better to look at other indicators for the economy itself.
Okay, I just want to switch gears a little bit and tell viewers that the European Central Bank just moments ago held its benchmark interest rate steady, but did change wording on guidance. So the ECB says rates may fall if we're confident inflation is heading to 2%. The ECB determined to ensure inflation returns to 2% in a timely way. ECB would cut rates if on target to meet 3 conditions related to inflation. So the headline is the ECB leaves its main refinancing rate at 4.5%. That was expected, but it has, as I'm seeing here, changed its wording on guidance. I don't have the exact wording change in front of you right now, but that's the headline on Bloomberg News, that the wording on forward-looking guidance has changed at the ECB. What, Brooke, should investors be looking at in the U.S. economy to gain a better sense of whether the economy is headed for a soft landing or not?
Well, if we just take a look at something like, the Small Business Investment Sentiment Index that came out the other day, it was really weak, and this is typically is a good indication of the overall economy as well, because the small businesses are the biggest employers in the U.S. That's one of them. So we're seeing this real divergence in indicators. Some indicators are saying the economy is strong, like in the U.S. right now, the GDP is being reported at 3.4% growth rate, which is a solid growth rate. But there's a whole bunch of other indicators that are probably pointing to a slowdown. That's the big difference there. So the GDP is once again lagging, but some of the sentiment indicators are pointing more negative and softer. I think the economy's poised to actually start to slow down very shortly if we look at some of those indicators.
Brooke, thanks. A great